Hey, what's up, Dividend Nomads? Welcome back. This is my third video today, Saturday morning here in China. And today, I'm gonna talk to you guys about growing a small account from scratch if you have very little money. And I actually have an account that I'm doing this on to show you guys how it works. And I actually also just recently put out a document called the $200 per month dividend blueprint. And what I mean $200 per month, I don't mean $200 per month in dividends. What I mean, if you're somebody who doesn't have a lot of money to invest, I'll show you guys about investing with only $200 per month, like to get started on your journey, which is basically something that I've kind of been doing in this smaller portfolio, just to share with you guys what that looks like. So first of all, before I show you my small portfolio that I'm starting from scratch, I'm going to share this $200 per month dividend blueprint with you guys. Then I'll show you how I've been putting it to work. So let me record the screen. I'm going to share with you guys my document. Now, if you want this document, you can have it for free. You just sign up to my newsletter and you can download it if it's for free. But some people complain that they haven't been getting the newsletter, so I'm not sure what's up with that, because a lot of people, they receive it. I know they received it because they sent me messages. They actually replied to the email and talked to me, and I had some conversation with some people there. So, anyway, I'll link all that down below. But let me record the screen and share the document with you here first, and then we'll talk more about growing a small account from scratch. So, new screen recording. Let me do this. 3, 2, 1. Bam. All right. So here we are in my $200 per month dividend blueprint. I'll make it larger so you guys can see. So first of all, I'll just walk you guys through this document. It's really short. So we have section 1, welcome, how this works. So you can see here, you can read along if you want, but most people, think they need thousands of dollars to start investing, which I thought that too. What I was told by my parents and all that crap. But the truth is, you can build a growing stream of passive income with as little as $200 a month now. And you can just focus on a few things like consistent investing, right? So always put that money there no matter what. Dividend reinvestment, which is, in the industry they call DRIP, dividend reinvestment program. So basically reinvesting the dividends and not spending them. This is just getting started, okay? A mix of high yield and growth focused dividend ETFs and an income booster. And by following this simple plan, you can start earning dividends almost immediately and watch them snowball over time. And this is exactly the method that I use to grow my larger portfolios. And I'm just doing it on a smaller scale here for you guys who don't have a lot of money to invest. And that's what my portfolio here that I'm going to show you is all about, this same strategy. So if you go to section 2 here, the $200 per month strategy. So how this strategy actually works, you can see you're going to put the $200 per month into 3 categories, as I mentioned up there in section 1, income now. So I'm looking for a fund that's going to give me immediate cash flow. All right, that means I want money right now. I'll put my money in right now, start getting paid right now. The next category is going to be a slow growth dividend ETF that compounds over time. So think of something like a JEPQ or QQQI, SPY, something like this, right? It pays a high yield, but it also goes up. But you have some of these other funds, they go down, and you don't want that when you're starting out. But the next one you have here, the next category is a yield booster. So one ETF with a mega monthly yield to boost the income a little bit higher, so you have more money to reinvest plus the $200 that you invest, right? So if you look down here, we have some example ETFs. Everybody talks about ULTI, so I put ULTI there, ULTY, XDTE. So these two would fall into the income now, right? Weekly income now. So these will pay you each and every single week. So you start getting money immediately. You don't have to wait. The next one is going to be, you can see there, the monthly income and slow growth. So you have things like JEPQ, QQQI, JEPI, things like that. Now, I'm not saying to buy these specific ETFs because I actually bought some of these, but also some different ones. So I'll share that with you in a minute. Then we have the monthly income booster. So we have the big mega yields, like you're looking for like the 180 to 100% yield ETFs, the ones that really aren't sustainable, but they're going to give you a lot of money right now. So I put HUI here, which is a Robinhood fund, and MSTY, which is the MicroStrategy ETF income fund. Like these usually have high yields. But if you follow my channel, you would know I sold out of this kind of stuff recently. And I do have my eyes out for another one, but from a different company. So I'm just kind of keeping an eye on it, but you'll see in a minute what I did. So anyway, you can see down here, I say choose one ETF from each category, right? You're only starting with a small amount of money. You don't want 20 freaking different funds, right? We're just gonna get 3 different ones and just stay in those 3 until our portfolio grows. And then we'll start diversifying into more stuff later. So we're gonna choose basically one ETF from each category: income now, monthly, high yield, mega booster, and then one that gives you income and a little bit of growth. Okay, so lastly, this is really simple, how to buy. Everybody should know this, right? You just open up a brokerage account, like Schwab, Fidelity, Vanguard, M1, IBKR, Robinhood, Webull, et cetera, et cetera. I personally, I don't like the Robinhood and Webull and this kind of stuff, even though I do use Webull. I've had Robinhood close my account because they found out I'm living abroad, and as somebody who's living abroad, that doesn't work for me. But Schwab, you know, they have like a Fidelity also. I think Vanguard might as well, but I know Schwab and Fidelity do. You can open a bank account with them. They'll give you a bank card, and you can use it anywhere in the world without paying fees. I use my Schwab credit card, or not Schwab credit card, Schwab bank card. I can go to any ATM here in China, Philippines, Thailand, wherever I happen to be, take money out of the ATM, and I don't have to pay any money, no fee. If it's like they charge you like 200, Schwab will pay that back. Let's say 200, like 200 baht or 200 peso or whatever. Schwab will pay that back to your bank account. So that's a really good advantage of those, which Robinhood and Webull and brokers like that don't offer that service. So lastly, automate your investment. So if you can, you know, if you tie your bank account to your investment account, just $200 per month or 100 or 300, whatever you can afford. Just set that where it does it automatically. You don't need to touch it. Just every month, that money just bam goes into the account, and you don't even have to physically look at it. Then lastly, if you can, re-enable, you know, the dividend reinvestment program, or DRIP, which just means, you know, whenever those funds pay the dividend, it doesn't go to your account in cash. It goes right back into the fund to make the fund larger, right? So reinvesting the dividends accelerates the compounding, makes the portfolio grow faster, as opposed to taking the dividends out of the portfolio and putting it in your pocket, right? We want to grow this to a big passive income machine as fast as possible. So that's why we, you know, go through all of these things. So lastly, we got like a little growth projection example here. So if you invest $200 a month for 10 years with an average yield of 40%, which my portfolio yields more than that. I think my portfolio yields like 42%. You know, you end up with a lot of money. After 10 years, you know, you can end up with a $300,000 portfolio just by investing $200 a month. That's $120,000 a year, or $10,000 per month in dividends. But that will take you 10 years to get there if you're investing the $200 each and every single month. After 20 years, you're looking at, wow, a $15 million projection. That's insane. Or $523 a month, which I think seems quite unreasonable, but that's the projections of what this could look like doing this if these funds stay alive, which we never know. But I think 10-year time frame is definitely doable. But after 10 years, are they going to let us keep making money like this? I don't know. So you take advantage of these opportunities, you know, while you can, in my opinion. But yeah, just an example. You know, none of this stuff is financial advice. I'm just telling you guys what I did that worked for me, and this is basically what I did. So number 5, just stay consistent, right? Stay consistent. Don't stop when the market goes down. You know, keep putting money in, keep buying, buy cheaper stuff, right? You get more shares, you get more dividends later down the road. Reinvest every single dollar that you can until you reach your goal, your income goal, like how much money it is you're trying to get. There's no point in doing this if you don't have a goal. And then, you know, rebalance after a year. If the allocations, you know, start to drift and one position starts to get too large, then rebalance. That's when you start to buy new stocks or new ETFs to diversify out into other things, right? So that's basically how I started doing this. And I'm going to share y'all my small portfolio now. I'll show you how I'm doing it right now, just so I can share with you guys the process, the same process that I just walked you through, how I'm doing it, which I have just getting started, so I haven't even completed the process yet. So let me show you my phone. 3, 2, 1, bam. All right, my small account is here in Webull. I'll refresh it for you guys. All right, so you can see right now this account is valued at $4,093, and I've been doing this for about a year now. So of usually $100 to $300 per month, depending on like whatever money YouTube pays me. I just put that money here, and it's usually, like I said, $100 to $300 a month. So whatever it pays me, that's what goes here. In this portfolio right now, I have 2 roundhill funds, and I'll explain these to you what they are. So if you look at the bottom one, XDTE, which is what I share with you in the document I just showed you, is income now, right? XDTE pays each and every single week. It's pretty stable because it's based on the S&P 500. So when the S&P 500 goes up, this typically goes up. When the S&P goes down, this goes down. But it's usually pretty much in line with the S&P. It doesn't do some crazy stuff like, when the S&P is going up, this isn't going down. It's basically doing exactly what the S&P is doing, which is what you want. You don't want some crazy volatility. So that's why I have XDTE in this portfolio. And you can see I have 74 shares of XDTE here, and my average cost is $44. So this is positive, both on the market return and well, I haven't received dividends yet because this is brand new. So I just restarted this portfolio again to share with you guys how I want to do it with what's available today, not with the funds that I used in the past, because the things that we're using in the past aren't working very well today, and there's better ones out there now. So that's why I've switched to these. But this one, 80% is the portfolio ratio, which is pretty good. You want to probably like anywhere between 50 to 70% probably of like your core income now fund. The next one I have is a mega yield, like my mega yield or high yield boost fund. And this is HOOW, which is the Robinhood fund by Roundhood. This one is leveraged. So this one can have big swings up, but also big swings down. So you have to be careful with this and not have too large of an allocation in here. So for me, that looks like only 12 shares, and you can see the position ratio is only 20%. Now what will happen is these funds start paying me income, start paying me dividends, I'm going to start putting these distributions into the income, but the slow growth, one that will grow slowly over time, and that doesn't have much downside, but it still pays. That's what I'm going to be putting this money at. So this position will slightly shrink, probably down to like 10%. And then what we'll have will be like XDTE, HOOW, something like QQQI, something like that, for the or JEPQ, one of those, something like that. That's going to grow slowly. The price is going to go up over time, and it's still going to pay dividends over time as well. So that's what I'm looking to do with the income that I earn from these. So that way I will have my 3 funds, and I'll keep putting the money there each and every single month and growing these funds. And I'm going to use the income from both of these to buy the slow grower. So that's my portfolio there, and how I'm doing that, how I'm growing a small portfolio from $0 to whatever, however much. Actually, the goal of this portfolio for me is to make enough money to pay for my rent costs here in Asia, which is not very much. Like my rent is relatively cheap here. Anywhere I go in Asia, I live in China, if I go to Philippines or Thailand or Vietnam, something like that, the rent in those places is relatively cheap. Like my house is, quite nice and brand new, and it doesn't cost me much money. So that's my goal for this portfolio, and I suggest you set a goal for your portfolio as well, so you have something that you're working towards and you know what it is you're working towards. So hope that's helpful. All the links and stuff's down below if you want to grab any of this stuff. And look forward to hearing your guys' comments and seeing you guys on the next video. Y'all take care.